Welcome back. Mullen Group, the Alberta-based trucking and logistics company, said an uncertain economic environment created, of course, by the trade tariff situation created a difficult environment in the first quarter for its customers. And the company says acquisitions are its path to growth in an uncertain environment. We're joined now by Murray Mullen. He is Chair and Senior Executive Officer at Mullen Group. Murray, thanks a lot for joining us. I want to show viewers a couple of quotes from the company's earnings release today on the current economic environment. You say at one point, or the company does, both consumers and shippers are uncertain about the future direction of the economy. But in the next paragraph, the company says the tariff trade debate did not materially affect overall freight demand in the first quarter. Square those up for us, that consumers and shippers are uncertain, but there was no material effect, at least in the most recent quarter.
Yeah, I think what we're trying to say with it in the first quarter is I can't really tell how much of what was pre-buying by the shippers is to try and front end to get ahead of the tariff issues, Paul. So freight demand wasn't impacted as much as what we might have thought with all the headline news. And that's because there might have been some pre-buying to get ahead of the tariff issues. And that will true up, I think, in the second quarter, where on the freight demand side. What we look at, Paul, at the end is what is end consumer demand. And we didn't see the consumers pull back a whole bunch in the first quarter from what we saw. And then secondly, then you take a look at it on the business side and say, well, what is business doing in terms of capital allocation? And are they putting capital to work? And we're starting to see that really slow down significantly.
There were some declines financially in the quarter. Adjusted net income fell by almost 20% to $18 million. Earnings per share, which is a reflection of aggregate net income, also came down. What were the sources of those declines?
Yeah, some of that was, we added some corporate costs, Paul. There was some, as we got ahead, we added some people at corporate costs. We had some professional fees. So corporate costs were higher because we were getting ready to grow. And as you know, we announced an acquisition a couple of weeks ago to kind of grow our company quite significantly. So, and getting prepared to do acquisitions. And because we think that not everybody is going to do well in this market. It's going to be pretty choppy for a little bit. And then we take a much longer term view. There's nothing I can do about the short term. It is what it is. It's issues beyond our control. But longer term, our job is to make sure we're positioned and we keep our eyes on center. What's the future look like?
Now you applaud your team for dealing well with an uncertain environment. You say they managed some difficult circumstances, doing well to generate results very close to last year's levels. You also say we're on high alert and we will adjust as markets dictate. What are you and your team going to have to do as this situation plays out?
Well, two parts again. Once again, one is short term. What are you going to do in the short term as freight demand slows and then adjust? And then longer term, we can't lose sight of that. Is that I think that all of this tariff talk and all these trade issues and a lot of stuff is all transitory. I think that this will all get resolved, but I just can't tell you when it will. So short term is going to be difficult, but at the end of the day, my job and the senior team here is to make sure we're planning for the future. And, acquisitions are a big part of that and making sure that, our balance sheet's in great shape, which it is. But I think acquisitions is the clearest path to growth. Unless you tell me that the politicians have got a great plan as to how to grow this economy and create jobs. I haven't seen it yet.
Are you seeing anything in the costed platforms of the major political parties, which are now all out for Canadians to look at?
Well, they've got lots of talk about resource development, about getting rid of trade barriers that would facilitate the movement of capital formation in the country. Those would all be very positive for good jobs, Paul. Is if you're putting capital to work and you're building things, you're probably creating really good jobs. So there's lots of talk, but you've got to turn, lots of politicians talk, you've got to turn it into action. And do Canadians want to take advantage of the things that we were blessed to have? That's up to Canadians to decide what kind of country they want to have. our view is that we sit on some of the best resources in the world, but you got to move them to market. You can't just sit on them.
Tell us about Cole Group, which is the acquisition, your most recent acquisition. You referenced it briefly a couple of minutes ago. Tell us more about that acquisition and what it does for Mullen Group.
Well, so you highlighted earlier that we're in trucking and we're in logistics, and that really what our platform has been built up over 30 plus years is moving of freight. When you're dealing with the customs brokerage side, you're talking about helping with the transaction, helping your shipper and your customer with that transaction. And that's exactly what the customs brokerage business is designed to do. And the Cole Group is one of the leaders in Canada with a platform in the US to help with the movement across the border and whenever there's trade. And you have to have, the governments all want to know what's moving. Are the tariffs being paid? Are the taxes being paid? And the Cole Group was one of the leaders in that group. We were delighted that Mr. Lucky chose to entrust his business and his vision and his brand with our group. That's what we're best at. So we can now provide a broader selection of services to our customers.
One concern markets often have of companies that pursue an aggressive acquisition strategy is the accumulation of debt. Now, you've referred to your balance sheet as being in very good shape, but what is the longer term strategy here to continue acquiring companies while I assume your goal is to maintain a strong balance sheet along the way?
Oh yeah, you've got to balance that. You can't just keep swinging for the fences. You've got to make sure that you're very thoughtful, and you've got to balance a great opportunity with what your balance sheet and the most stuff. So that's our job. We're fortunate, Paul, that we didn't overextend ourselves during the last cycle. So we come into this thing very well positioned, and we didn't do any acquisitions at the peak of the market. Not very many. Now, we're going to look at growing, and and truthfully, that's where you're adding value for your customers, taking a long-term view. And that's what we do here at this group. I've been involved with it all my life, and we'll just continue to build for the long term. That's what we do for shareholders. Go ahead. Every acquisition we look at it, does it generate cash for us? So once you generate the cash, we can either give it back to shareholders in terms of the dividend, and we pay a nice healthy dividend to shareholders. We pay it monthly, or we'll use it to pay down debt or use it to grow. But that's what we do.
What should investors understand about the financial results that Mullen Group will rather put on the table for the rest of this year?
Well, we came up with our business plan in 2025 in December of last year, and we're not changing our outlook on that, Paul. We're still on for 2.25 billion of sales this year, and generate about 350 million of operating income before depreciation and amortization. So I'm not changing it, in spite of all of the noise and despite of all of the chaos. It could be short term, but eventually it'll just we'll pick it up. So we're not changing our outlook at all, even though there's lots of noise. You can't get emotional over these things. If you do, you'll make the wrong decisions. So we got a steady hand on the wheel, and we've got our eyes focused on the long term. That's what we're doing here.
Murray Mullen, thank you so much for joining us today. He is Chair and Senior Executive Officer of Mullen Group. Well,